mentioned every night, our week in San Francisco would simply not be possible without the generous help of Intel, the world's biggest manufacturer of microchips. Intel, I will tell you, has been very generous. When this week started, I didn't know much about that company. I really didn't. So I wanted to see firsthand who would be foolish enough.
Intel just admitted, in plain language, that its newest chips are not good enough. Not marketing spin, not a competitor's talking point. Intel's own CEO stood in front of investors and said the quality of the chips coming off its most important new production line is below what he wants it to be. Normally, that sentence ends a product. Instead, right now, at this exact moment, customers are buying every single one of those chips anyway, including some that would have been thrown in the trash a year ago. That is not a contradiction. That is the actual story. And it is stranger than the version you probably heard. Let's start with the admission itself, because it matters exactly how blunt it was. Intel's new 18A manufacturing process is the most important bet the company has made in a decade. It is the foundation for Panther Lake, the laptop chip meant to prove Intel can still compete on the high end. And
instead of only being seen as a slow-growth chip company, these days, Intel is being viewed as a possible chip manufacturing alternative to TSM. And that's a massive shift because TSM's right now the world's largest semiconductor foundry.
And for Clearwater Forest and Xeon 6 Plus, the server chips meant to prove Intel can still compete in the data center. Independent analysts estimate the yields on that process, meaning the percentage of chips that come off the line actually working well enough to sell at full spec, sit somewhere between 65 and 75%. That is meaningfully below what a factory needs to hit to run at healthy profitability. Intel's own CEO acknowledged the manufacturing quality is in line with the company's internal plan, but then added, unprompted, that it is still below what he wants it to be. That is about as close as a CEO gets to saying out loud, on the record, that the product is not where it should be. Here is where the story stops being a normal quality control problem and starts being genuinely bizarre. In a functioning market, when a manufacturer admits its yields are too low and its chips are underperforming target, demand drops. Customers wait for the next revision. Reviewers tell people to hold off. That is not what's happening. Reports have emerged that Intel is now selling chips that would typically be scrapped entirely, meaning units that fall short of the specifications Intel originally intended, because customers are accepting them anyway just to get anything at all.
3 million of the total 1.4 million signatures collected for the EU Citizens Initiative have been verified. Only 1 million were needed to ensure that the issue is discussed at the European Commission, so now it'll no doubt be discussed 0.3 million harder.
Average selling prices on Intel's server chips jumped 27% in a single quarter, even as the number of chips actually shipped fell compared to a year earlier. Read that combination again. Fewer chips going out the door. Higher prices charged for each one. That is not what a company in trouble looks like on a spreadsheet. That is what a company looks like when it has accidentally discovered that scarcity is its own kind of pricing power, whether or not the product underneath that scarcity is fully baked. So why would anyone knowingly buy an admittedly imperfect chip instead of just waiting? Because the alternative right now is not a better Intel chip. The alternative is nothing. The entire industry is short on compute at exactly the moment AI demand exploded past what anyone forecasted even a year ago. Hyperscalers need processors to sit next to their GPUs, orchestrating workloads and handling the parts of AI infrastructure that still run on general-purpose chips instead of accelerators. PC makers need chips for a wave of Windows 11 upgrades forced by Windows 10, finally reaching end of support. Enterprises need server refreshes they had been putting off for years. All of that demand landed on the industry at once. At the exact moment, Intel had already cut back its older manufacturing lines to make room for the 18A transition. And at the exact moment, its new manufacturing line was still working out the kinks that come with any brand new process.
To build 3 or maybe even 4 fabs. But instead of trying to keep up and fight with Nvidia and the other things going on in the market and reinvest like they needed to, Basically, they were giving money back to shareholders. This turnaround was not going to be cheap, but it turned out to be more expensive than anybody thought. They lost $7 billion from the foundry unit in 2023 alone.
Intel's own finance chief described the resulting shortage as a bottleneck and admitted the company would be effectively hand-to-mouth, shipping chips out of the fab about as fast as it could get them to customers, with essentially no buffer inventory left standing between production and delivery. That is the part that makes calling this a story about broken chips genuinely misleading, and also the part that makes it more interesting than the simple version. This is not Intel making a product nobody wants. This is Intel making a product everybody wants so badly that they are willing to accept it flawed. Those are two completely different business problems, and only one of them is actually dangerous long-term. To understand how unusual that is, it helps to compare it to what happens when other chip makers hit supply problems. AMD and Nvidia are fabless, meaning they design chips but pay outside foundries, mostly TSMC, to actually manufacture them. When demand outpaces supply for those companies, the constraint sits with a third party, and there is at least a theoretical path to buying more capacity from a manufacturing partner elsewhere.
And the first thing you notice about Intel is they're a little bit controlling. They actually have a sign here on the floor telling you exactly where to stand if you want to take a picture of the Intel sign. Not here, not here, but here.
Intel is one of the only major chip companies left that still owns its own factories end-to-end. That is normally framed as an advantage, a hedge against exactly the kind of supply chain chaos everyone else in the industry is dealing with. Right now, it is cutting both ways. Owning your own fabs means owning your own yield problems too. When Intel's internal manufacturing line is not producing at the rate or quality the company wants, there is no other vendor to lean on. The company that controls its own destiny also has nobody else to blame and nobody else to call when the line is not keeping up. There is also a strange twist buried inside Intel's own supply chain that almost nobody outside the industry knows about. Even though the 18A chips are manufactured in-house, plenty of the surrounding components inside those chip packages, things like certain chiplets and packaging steps, still come from TSMC. So Intel is simultaneously trying to prove it can be TSMC's competitor while still depending on TSMC to help finish its own flagship product. And TSMC's most advanced capacity is booked solid by Nvidia, Apple, AMD, and a handful of other giants who all showed up with checkbooks years before Intel needed a favor. Analysts tracking this directly have pointed out that Intel's real bottleneck right now is not entirely its own fabs. Some of it is the TSMC-made pieces Intel still can't get enough of, even
for these next few years. So if I was to make a choice between these two semiconductor manufacturing companies, I would choose Taiwan Semiconductor over Intel. Asterisk. The big question mark, the big unknown is geopolitical factors. Intel is getting massive investment from the US government.
even for a chip that is supposed to be Intel's proof that it no longer needs anyone else. Now layer in what this means for the price tag on the laptop or desktop you might actually be shopping for this year, because this is not an abstract boardroom story. Industry analysts are projecting price increases in the range of 15 to 20% on PCs through 2026, driven partly by this exact chip squeeze and partly by a parallel memory chip shortage hitting the entire industry at once. Some individual components have reportedly seen price spikes over 1,000% compared to last year, in the memory market specifically, which is compounding the CPU shortage rather than offsetting it. PC manufacturers facing this squeeze are making quiet trade-offs most buyers will never notice on a spec sheet. Some are holding headline prices steady and shrinking the RAM or storage included instead. Entry-level laptops are expected to become harder to find altogether, as Intel prioritizes wafer allocation toward the higher-margin chips destined for AI servers instead of budget consumer parts. If you have noticed a laptop that used to be a great deal quietly disappear from a retailer's lineup, or get replaced by a similar model with less memory for the same price, this shortage is very likely why. All of which raises the actual question worth asking here. And it's a more useful question than simply asking whether Intel's chips are good or bad. Is this shortage actually good news for Intel wrapped in bad-looking headlines, or is it a warning sign dressed up as a win? Intel's own CFO, when asked directly whether the demand-supply imbalance was a problem, called it largely a win. On paper, it is easy to see why. Selling out every unit of production, raising prices, and watching average selling prices climb 27% in a quarter would be a dream scenario for almost any manufacturer on Earth. The company is not sitting on unsold inventory nobody wants. It is sitting on the opposite problem, a waiting list. It cannot clear fast enough. But the more skeptical read, the one plenty of analysts have been making since the shortage first became public, is that Intel is capturing short-term pricing power from a crisis it did not fully cause and cannot fully control, while the underlying issue that created the shortage in the first place, insufficient yields on a brand new and unproven manufacturing process, is still unresolved. A shortage caused by too much demand and too little supply eventually gets fixed by adding supply. A shortage caused by a manufacturing process that has not yet matured to acceptable yields gets fixed by fixing the manufacturing process, and that can take months or years, not weeks. Intel is currently benefiting from the first kind of problem while still quietly working through the second kind underneath it. The danger is what happens when the demand side eventually cools off, whether because customers who accepted flawed chips out of desperation start pushing back once alternatives open up, or because the broader AI build-out that is soaking up every spare processor on Earth slows down even slightly. If that happens while Intel's yields are still sitting in the 65 to 75% range instead of comfortably above 90, the pricing power evaporates and the yield problem is still sitting there, unresolved, waiting. There is a version of this story a year or two from now where none of this mattered, where Intel used the breathing room bought by this shortage to get 18A yields up to where they need to be, where Panther Lake and Clearwater Forest matured into genuinely competitive products, and where this entire chapter reads as a rough but survivable stretch on the way back to relevance. There is another version where the yield problems never fully resolve, where customers who settled for flawed chips out of necessity quietly migrate to AMD or Nvidia's integrated platforms the moment supply loosens up anywhere else, and where this period gets remembered as the moment Intel mistook a temporary shortage for a genuine recovery. Both versions are consistent with everything that has been said publicly so far. Nobody outside Intel's own fabs knows yet which one is actually happening, including, probably, a fair number of people inside Intel's own fabs. What is not in dispute is the headline everyone keeps repeating slightly wrong. Intel did not admit nobody wants its chips. Intel admitted its chips are not as good as it wants them to be, and then watched customers buy every single one anyway, because the alternative was buying nothing at all. That is either the most quietly impressive save of Intel's rough decade, or the most dangerous kind of good news the company could possibly be getting right now, propping up a turnaround story with demand Intel did not create and cannot guarantee will still be there once the yield problem finally has to be solved on its own terms. Do you think this shortage saves Intel's comeback, or is it just delaying the real reckoning? Drop your take in the comments.